try and understand from Nilesh Shah about what he thinks about the importance of this, plus a lot of other measures that have happened in the last 7 days. Sometimes weeks seem like months, and sometimes months are compressed into days. And Nilesh, it almost seems that the last few days, or the last few weeks, if you will, months have been compressed into it in terms of news flow, right? But did the weekend or the last 7 days, have they brought some hope? There is thawing of India-China relationship. There is supposedly some leeway between the two leaders of US and India around that as well. Plus the GST changes, so lots have happened.
Oh, absolutely. I mean, clearly the last 1 or 2 weeks haven't been as eventful as they have been. Clearly the GST reforms or the GST rationalization, I think is probably one of the biggest moves on the economic side in like probably many months or many years, I actually think. And I still believe that we are kind of undermining or underestimating its impact. India has always been a consumption-driven economy. I mean, 65% of our economy and GDP comes from consumption. So just imagine an effective 5% reduction in the tax rate on GST is like huge. And we will actually realize the importance of this only probably a year or 2 years from now.
Okay.
And not necessarily in the next 1 or 2 months. The next 1 or 2 months would mean a lot of adjustments. Because we all, watch companies' results, companies' earnings. So obviously for them, this whole transition could basically in the short term be a little bit kind of challenging because you're sitting on inventory at the old GST rate and all of that. But the impact over the next few quarters will be very, very visible. So I clearly believe that's the big game changer as far as we are concerned. In addition to that, I think even on the global front, we've seen some really positive developments. This whole kind of realigning back with maybe China, with Russia, even the tweets that we saw of the two leaders of both United States and our own country, I think gives you a message that probably the worst is over on that front. If at all, you can only have now more positive developments there. So I think on the whole, the GST plus the geo-economics, if not the geopolitics, I think a combination of these two things, I think really augurs well for us.
The tactical factors as well, Nilesh. I mean, somebody put out this tweet. It was Rahul Sharma of JM Financial who put out this tweet that the Nifty to gold ratio at the lowest in some 15 years or some such. Then the FIIs short long 93 to 7. I mean, such extreme short positions continuing for month after month. At some point of time, this has to give, right?
Oh, absolutely. I mean, this can't sustain for too long. And we saw this when you refer to Nifty gold, maybe about a year and a half ago, it was actually a bit the reverse, where the Nifty had a terrific move and the gold had not had a terrific move. And at that point of time, it was becoming very difficult to fathom or comprehend as to why gold will do significantly better than Nifty, but it has. So some of these past trends for things which are more widely traded do tend to materialize because these are nothing but trends or patterns. And so they do kind of end up being there. And I clearly believe that with a lot of these developments that we've seen, it's now time for the Nifty to kind of start outperforming many things, be it global equity markets, be it global commodities, be it gold, any of these things. I actually believe that the Nifty is probably well positioned to kind of start to kind of outperform and get back onto, being a massive wealth creator.
Okay, can I ask you though, for Nilesh Shah of Envision, is it important for the Nifty to outperform massively or for the Nifty to not buckle down? Because the Nilesh Shah that I know goes bottom up, looks at businesses, and for him, maybe even a stable market which doesn't buckle down would give his stocks a chance of fair degree of outperformance. So what is necessary, outperformance or just stability?
And I'll tell you both things.
Okay, sure.
For the Nifty to outperform, it will be a huge trigger for FIIs to come in.
Right. Okay.
For them to stop selling. Okay. Now, where's the support from our market coming in from? It's domestic liquidity. Domestic liquidity or domestic investors are going to be focused on the Nifty and saying, as long as the Nifty is holding up, I'm fine. I'll keep doing my bottom fishing. I'll keep doing my stock picking. The Nifty drives the sentiment. So it's important for the Nifty to kind of hold up, to create that feel-good factor for domestic investors to kind of keep allocating and allocating more and more.
Makes sense.
Whereas for Nifty to outperform, it's essentially the global guys, because the global guys look at relative trades. It's India versus rest of EM, it's India versus BRICS, it's India versus US, it's India versus DM equities, all of that. And when Nifty begins to outperform global indices is when they basically start to kind of feel edgy and saying, look, hey, I mean, are we missing out on this trade? Let's get in.
So Nilesh, you speak to so many of these global investments, right? You advise some of them, you may be managing money, etc. What are they saying? Is this the geopolitical driven underweight on India, or is it a combination of geopolitics plus valuations? Because valuations likely have become a lot more reasonable than what they were in the past.
I think things like geopolitics, geoeconomics just kind of become very ostensible reasons. But the bottom line, I think, is that clearly, yes, our markets have done very well in the post-COVID era. Even over a 5-year, despite the 1 year of sluggishness, India is probably amongst the best or the best performing large market. Okay, that's a reality. But also what has happened is in the last few quarters, maybe over the last 1 year, growth has slowed down. And basically, global investors look at Nifty earnings. They look at two things. One is GDP growth, second is Nifty earnings. And that's basically kind of slowed down a bit. So to that extent, they don't have an incremental trigger. And on top of that, it's been a market which has performed so solidly. And that the valuations are not at some discount, which had been the case for a lot of the other EMs where they have basically put money into, like markets like China, markets like Hong Kong. They had underperformed for a very long period of time, so a lot of allocation went there. But the moment they see signs of the GDP growth coming back, the impact of GST, the impact of measures around deregulation, when all of that starts to kick in, I think they'll come in because they are massively underweight. And these kind of situations, massively overweight, massively underweight, don't last for too long.
Too long, that's true. In any market.
In any market.
Forget such an important market like India.
Exactly. So it's just a matter of time.
Very well put. Okay. So now let's try and figure out how are you positioning portfolios currently, right? Are you also very large overweight on consumption because of this GST, income tax, etc. led boost? Or does CapEx find a reasonable space in your portfolio because the valuations have come off a bit?
No, I think it's going to be both.
Both. For you, it's still both.
It's still both. Because the consumption is all around the Indian consumer. And that's not going away. That's going to kind of remain there. And I think it's a decadal opportunity. And within consumption, either you play it through rising penetration or you play it through rising premiumization. Both things, both aspects. So there'll be some categories where penetration is very low.
Like?
And there is room for it to. For example, I still believe the whole EV opportunity. I think penetration is still very low. We've got to what, some 10-20% conversion? That's a long way to go. This is not stopping till it gets to 50%. Yeah? Or you look at premiumization, where there's like a lot of discretionary stuff which is happening. Also, penetration can also play out in some of the things like consumer appliances, where we think that all of us here living in the cities have the home appliances, but you kind of go towards, you know, the more eastern part of the country, eastern part of the markets, you would actually see massive under penetration out there. So you will have different categories. So different categories display in terms of penetration in some pockets of the country, and there'll be premiumization on a very broad basis. So that I think is there. To CapEx, I don't think without building out infrastructure, we essentially can become a competitive economy. And for manufacturing to do well, we need world-class infrastructure, which means more and more investments. Now, those investments can happen in infrastructure itself, manufacturing, in energy, whichever way you call it. That's basically also going to be important. And there are going to be cycles. You'll see for a few quarters, consumption do well, a few quarters, CapEx do well. But as long as you're building out a portfolio for, say, the next 3 years, 5 years, or rest of this decades, India is going to get driven both by consumption and by CapEx investment.
Okay, interesting. So, sorry, just to probe that point a bit further. So, in rising penetration would be, for example, EVs, right? Rising premiumization. Does it bring FMCG into the fore again? Because I know you were not overweight FMCG.
Yes.
Does it bring it back, or are you playing premiumization through some other way?
So I think premiumization can happen, for example, say the alcobev space.
Okay.
a lot of premiumization has happened, or it's happening, and a long way to go.
Right.
Right? The arrival of the Indian single malt.
Big way, right?
That's like been a new category creation itself within the overall alcobev space.
And this is from a person who doesn't drink too much, or maybe doesn't drink at all.
Doesn't drink. So that's one. Two is look at it even in terms of cars, automobiles. There's a whole drive towards premiumization. It's no longer the entry level which matters. It's essentially the whole premiumization which is happening even in things like cars, automobiles, consumer appliances. That's happening. Things like, say, for example, luxury watches, premium watches. While, for example, Titan's watches don't grow at that pace, but if you look at basically the luxury watches, they are comfortably growing at 20-25%. I'm talking about at least a specific company there, which is growing at 20-25%. Okay? That's clearly a proxy of premiumization.
Got it. Okay. Okay. On autos, by the way, it's a lovely watch that you are wearing too, must say.
Thank you.
Okay, on the topic of cars, Nilesh, there are two arguments, right? That small cars haven't done well for a while. Yes. Does this push that, and therefore does Maruti come into the picture? I'm not asking you to comment on Maruti, but just laying it out as an example. Or does, for example, a Mahindra & Mahindra, which has really gone off the charts. I mean, 999 cars booked in 130 seconds. Yes. It was a headline which was so pleasing, right?
Yes, yes.
And that's premium.
Yes.
So does that do well? Does small cars do well? Or now we'll see a combination of everything do well?
No, I still think it's going to be premiumization.
Premiumization.
I think it's and driven more by aspirations. The average Indian individual family in India wants a better car, right? And I'm not saying better car purely from an engineering point of view. I'm just saying from an overall kind of a look, feel, experience point of view. I think they want a better car. And within that, then the whole drive towards decarbonization, the electric cars. So I think again out there, the names that you mentioned clearly have had a head start, a massive head start, where they've made an impact. They're pretty much defining the category here. And then now you have also some international players coming into India. So that whole space is going to do well. So I'd still kind of bet more on premium cars, on more of the EVs versus essentially the conventional small car space.
Got it. Final couple of questions, or maybe one last question. And I'm using again a stock as an example, but last week or week before last, I read a note from Damien Castle of CLSA, wherein he's asked CLSA sales guys across the universe about which is that one stock that they would put $1 million in for 5 years. One answer was Eternal. I'm using that as an example because that space has seen some 4 or 5 large upgrades in the last 7 days, right? Platform companies, Nilesh, have they finally come of age? Have they finally found acceptance? And therefore, could this lead to serious outperformance over the next 5-7 years? Or is there some danger lurking out there, whether in terms of valuations or competition that we are not aware of?
No, absolutely. I mean, that's really the space to be.
Okay.
I totally agree with that. Okay, the two most powerful structural themes from an India point of view are urbanization and digitization. If there is any opportunity which captures both of this, it essentially is consumer internet platforms. And within that, the name which you mentioned, we own it, I think is super well placed. Just look at it from a quarter. I think it's gone slightly under noticed, but basically the GMV or the NOV, the net order value of the quick commerce business of Eternal has kind of gone ahead of the net order value of the food delivery business.
Yeah.
And the food delivery business is growing at maybe 15 to 20%. The quick commerce space is growing at 40 to 50%. Now, say over a 5 to 7 year period, that gap between 15% and 45%, the annual 3x increase, higher growth rate over 5 years, the compounding effect of that is massive.
Got it.
So rare to come across businesses that you have an economy growing at 6-7% in real terms, and you have a space which is growing at 40-50% CAGR and is expected to do so for maybe the next 5 years or maybe even longer. That's quite phenomenal. And that, I think, sets the stage for massive outperformance for the rest of this decade.
If you have doubts on valuations, viewers, here's one answer which should give you some food for thought. Remember, it's not a recommendation from Nilesh, by the way, but just an insight into how he thinks about these businesses. Nilesh Shah, such a pleasure talking today to you, as always. Thank you so much for making the time to come to our studios.
Thank you. Thank you, Neeraj. Always a pleasure to be here.
Thank you so much.